Chinese officials recently expressed strong dissatisfaction with U.S. sanctions that came in response to a new national security bill on Hong Kong, warning that crossing red lines and meddling in what China considers its own internal affairs could put the trade deal at risk, The Wall Street Journal first reported on Friday.
Beijing is making it clear that its compliance with the deal is contingent on the U.S. refraining from interference in issues of near-term critical strategic importance, chiefly its efforts to rein in Hong Kong's autonomy and constrain Taiwan, says Rees. But given the global economic disruptions caused by the coronavirus pandemic, China's ability to dramatically increase purchases will be somewhat limited to begin with.
The long-awaited Phase 1 deal was signed back in January, following months of prolonged negotiations which took a toll on market sentiment for much of 2019. The centerpiece of the agreement was China's pledge to buy $200 billion of U.S. goods like soybeans and pork, but experts initially questioned whether those targets were realistic, and now, amid rising tensions and the economic fallout from coronavirus, they appear even less likely.
As the November presidential elections approach, the trade dynamic is likely to become increasingly volatile as the White House calculates whether it is an asset or a liability going into polls, says Rees.
Trump announces new sanctions on Chinese officials, but won't scrap Phase 1 trade deal, Forbes.
Stocks turn positive after Trump keeps Phase 1 China trade deal intact, Forbes.
China pledges to uphold Phase 1 trade deal that includes $200 billion purchase of U.S. goods, Forbes.
Stocks hit record highs as U.S. signs Phase 1 trade deal with China, Forbes.
Full coverage and live updates on the coronavirus.